Welcome to this video of Gap Advisors. In this, we would be discussing an issue which was submitted by one of the registrants on gapadvisors.com. The issue is on first time adoption of Indian accounting standards. As such, the Indian accounting standards became applicable from 2015. However, still we find certain issues are coming up on application of Ind AS 101, and therefore I thought to discuss this issue. It's a very we will discuss not the whole issue, but a few elements of the issue, which is very basic, because once the basics are clear, then any complex application also becomes very clear. So the issue here is this is the issue ID 4319. This is the facts of the case. Company had adopted Ind AS first time in previous year. There would be some grammatical errors because this is the issue as submitted by the registrar. So there is no editing done to this issue. Company had adopted Ind AS first time in previous year at FTA. FTA, the queries has not explained. So FTA, we assume it's first time adoption. At FTA, company adopted fair value model for one class of PP. In next year, company changed its accounting policy of recognition of certain class of PP under revaluation model. At first time adoption, fair value surplus was recognizing change in equity. The queries has only specified change in equity. The queries has not specified the component of equity in which the fair value surplus or the fair value change was recognized on first time adoption. Okay, so let's have the bear that in our mind, that there is no information with regard to that in this issue. The company wants to continue the policy of recognition of fair value surplus or reversal through change in equity only, not through change, not through other comprehensive income. Company is showing capital WIP figure as a separate line item in balance sheet itself, not clubbing with PP figure. Okay, so this is the facts of the case. The issue is whether such a change of subsequent fair value changes directly in other equity under revaluation surplus line item is in compliance with Ind AS 16. And can a company show capital WIP on the face of balance sheet, not through property, plant and equipment schedule? As such, when you read this issue, there is no issue asked by the queries with respect to Ind AS 101. The queries is concerned one with the compliance of Ind AS 16, and second, the compliance with basically the presentation of financial statements, that is Ind AS 1 and division 2 or division 3, which the queries has not again specified. So we assume it is division 2 of schedule 3 to the Companies Act 19, to the Companies Act 2013. So now first is when you read this issue, as I said, there is no information in this issue with regard to change in equity. Okay, in which component was this fair value surplus recognized in changes in equity, whether it was recognized in retained earnings or whether it was recognized in revaluation, whether it was recognizing revaluation surplus component of equity. So that is not there. Now why is it important to understand the this is what we will discuss in this video. Why is it important to know that in which component of equity was this fair value change recognized. But however, before going there, let's see under which requirement of Ind AS 101 was this fair value was this fair value model for PP adopted. Okay, so we will go to the dashboard here. So this is the dashboard of gapadvisors.com. Okay, when you register with us, you will see this dashboard, and then you click active standards referencer. Okay. So select Ind AS and then select Ind AS 101. Okay. So now let us first go to, as I said, under which requirement was this fair value model been adopted. So that is under Appendix D. So it is in para D5. So para D5 of Ind AS 101 says an entity may elect to measure an item of property, plant, and equipment at the date of transition to Ind AS at its fair value and use that fair value as its deemed cost at that date. Now, okay, so para D5 says that an entity can measure an item of property, plant, and equipment. So it can the company can select certain items of property, plant, and equipment to measure to be measured at fair value on the date of transition to Ind AS. And that fair value is then termed as its deemed cost. So that fair value becomes the cost of that item of property, plant, and equipment from the date of transition to Ind AS. Okay, now under Ind AS 16, there are two models, cost model and revaluation model. Now the question is whether the company follows cost model or the revaluation model. Simply by fair valuing an item of property, plant, and equipment, that doesn't mean that the company is following a revaluation model. Okay, if so the company has to decide first. This comes from which requirement? This comes from, I will show that. This comes from para 7. Okay, what paragraph 7 of Ind AS 101 says? Paragraph 7 of Ind AS 101 says an entity shall use the same accounting policies in its opening balance sheet and throughout all periods presented in its first Ind AS financial statements. Those accounting policies shall comply with each Ind AS effective at the end of its first Ind AS reporting period, except as specified in paragraphs 13 to 19 and appendices B to D. So, para 7 requires a company to first decide what will be its accounting policy. whether it will follow cost model or whether it will follow revaluation model. And if the company follows cost model, okay, so then the fair value determined as per para D5 of Ind AS 101 becomes the cost of the item of property, plant and equipment. Okay, and if the company follows a revaluation model, then it is basic the fair value of the item of property, plant and equipment as per para D5 of Ind AS 101 is the fair value of that item of PP okay, as per revaluation model and not cost model. So why are we concerned here with whether cost model or revaluation model is followed? So this is one para 7, which requires one to first determine at the date of transition itself that at the end of the reporting year, what will be your accounting policy? Whether it will be a revaluation model or whether it will be cost model. Okay. Now, when we go to para 11, this is important. So, para 11 says the accounting policies that an entity uses in its opening Ind AS balance sheet may differ from those that it used for the same date using its previous gap. Okay, the resulting adjustments arise from events and transactions before the date of transition to Ind AS. Now, therefore, an entity shall recognize those adjustments directly in retained earnings or if appropriate another category of equity at the date of transition to Ind AS. This is why it is important that the company should be clear at the date of transition whether it will follow cost model or revaluation model for that particular class of class of PP to which that item of PP belongs. Okay, because if the company is following cost model, okay, and the company has taken the exemption of para D5 that it need not calculate retrospectively the cost of the item of PP as per Ind AS 16, but it can fair value that item of a particular item of PP and take that fair value as its deemed cost. That is para D5. If it follows cost model, then the changes, fair value change, the change between the previous gap carrying amount and the fair value determined according to para D5 will go to retained earnings. Okay, the component of equity will be retained earnings. However, if the company decides to follow revaluation model and not cost model, then we come to this. If appropriate, another category of equity. So, if it follows a revaluation model, the fair value changes will be recognized in revaluation surplus or to say revaluation reserve. Okay, so therefore the company needs to be clear at the date of transition itself that whether it follows cost model or revaluation model, and accordingly based on that the changes, the gap change related changes, that is difference between previous gap carrying amount and the fair value as on the date of transition determined as per para D5 of Ind AS 101 will be recognized either in retained earnings or in revaluation surplus oblique revaluation reserve. This is what I wanted to clarify in this particular issue. We will discuss the other aspects of the issue in a later video. This because I wanted to keep this video short and I wanted to discuss only one particular aspect so that it becomes very clear and understanding. Thank you.